Don Luskin, though, let's look at this. Profits are the mother's milk of stocks in general, but profits are the mother's milk of bank stocks, too. Now, question is, can the profits be continued, and can they sort of buy their way out and work their way through whatever lagging indicator credit problems Chris Mayer is desperately holding on to?
Yeah, actually, Larry, I think both you and Chris are kind of making the same error. You're just falling off the error in different directions, and that is you're treating the banking sector as a monolith, when in fact it's a complex of extremely different companies. Goldman Sachs is not the same as the Merrill Lynch unit with inside Bank of America, and Wells Fargo is not the same as Citibank. It's very interesting that the two data points we have in bank earnings season are Wells Fargo and Goldman Sachs, which are absolutely the creme de la creme of their little niches within the banking sector. It remains to be seen how well other less well-managed banks are going to do.
Like, for example,
we know.
How about Citi?
Well,
Let's go straight
I think contrasting Wells Fargo and Citi are the perfect poster child of the world's best managed bank and the world's worst managed bank. And I think
you're probably right. You know more about these guys than I do. You used to work for Wachovia. No, did you work for Wachovia?
Wells
You
Fargo.
worked for Wells Fargo. That's right, years ago. Look. Citi said, though, they're going to be very profitable. That question is it credible, Don? It's going to be reported very soon. Is it credible,
No, I don't. Well, we'll see what they report. But I've gotten to where I just don't believe anything that Citibank says anymore. I know that on March 2nd, they diluted their common shareholders by 75% by doing a coercive preferred for common exchange, specifically to realign their capital structure to be able to absorb losses. Then 2 weeks later, Vikram Pandit, the CEO of Citibank, comes out and says we're having the best quarter in 2 years, so there aren't going to be any losses to absorb. Well, I'm really sorry, shareholders. You just lost 75% of your wealth for nothing. Well, this is an out-of-control situation. You compare this to Wells Fargo. You know, Wells Fargo, look at their chairman, Dick Kovacevic. He says publicly, he dares to say, he is confident enough to say, that these Treasury stress tests are, his word, asinine.
Well, I agree.
Do you know how confident he has to be about his control over his bank to be able to say that to his regulator?
Richard Kovacevic is a clear-headed, good-thinking, free market guy. But
and I think the stock market is sort of overly optimistic at the moment about this being a V, and I don't see it being a V.
Well, I don't know. Look, we can debate a V another time. I think the potential for a V, by the way, is underrated. But that's my take. That's a different segment.
The market likes a V now.
What about
Larry, I hope you understand it. To achieve a full V, the S&P financial sector would have to now go up by 400%?
Well, heck. There's going to be leaps and bounds from these low price levels. I mean, Goldman has a respectable stock price, but the others do not. All right, but Don Luskin, you know, these tea parties springing up around the country, they hate bailout nation, they hate TARP. How's the interaction going to be? Will the Obama team listen to the tea parties on this?
Well, there's no question that the Obama team has got to be listening to the hue and cry from Republicans and Democrats all over the United States saying we want these bailouts to stop. So any bank that they can possibly take TARP money back from, I think they will. They want out of this tar baby. This is Vietnam for them.
All right, that's a very interesting point. Chris, let me ask you this. A serious question. You're up about 30%, I'm rounding up, from the early March 9th bottom, fine, on the S&P 500. But when you look at the tables, Don, you go back to the peak of the market, October 9, 2007, you're down 45%. If I throw in, what, 5% on dividends or something like that, in round numbers, I'm off 40%. Now, that's if I bought at the peak. Obviously, most folks don't, but whatever. Let me ask you this. Are there limits to this rally, and should people, as a prudent measure for their own retirement, think about selling in to the current rally to recoup what they lost?
Well, yeah. I think that we have to recognize that we're in a very, very different world now. We are in a world that looks more like the 60s and 70s than the 80s and the 90s. This is not the time for buy and hold, gospel of equities, put them away and forget them, investing. This is going to be the time of short, sharp bull markets and bear markets where, unfortunately, everybody's going to have to be a market timer. Now, if there is anybody out there who was wise enough not to dump at the bottom. I mean, you're probably addressing an audience of 2 or 3 guys when you say that. Yeah, I would be looking for a chance to get out here, but I don't think we're there yet. Goodness gracious, when you're down, when you were down at the worst of it, 56% from the top, and you have a mere 27 or 28% rally. and that's the only rally of that magnitude that you've had in that whole bear market, I think you're entitled to a little bit more, and I think some of your mustard seeds are taking root. At least things have started to get worse more slowly. We do have some more upside, but let's not get carried away. We are not going back to S&P 1500 any more than we're going back to NASDAQ 5000.
Well,
those days are gone with Ronald Reagan and Bill Clinton.
You know, I'm a guy who's buy and hold, but I think my confidence has been shaken with all this stop and go monetary policy. We have a lot of regulation going on from Team Obama inside the economy. I don't like that either, but I do think that the Fed stimulus is going to pump out a recovery. You're at 859 on the S&P, and you're just over 8,000 on the Dow, Don. I'm going to ask the same question of Quentin in a second. How high can this go, in your judgment? This move right here, how high do you reckon? Is there a danger sign for investors not to get too ebullient, not to get over-enthusiastic? I mean, even me, I'm usually an optimist. I believe in American progress and democracy, but the fact is, I'm just not sure right now. What's your take? How high, Don?
Well, I think we have to be very, very cautious because, Larry, one of the reasons why all of the populist political rhetoric that was coming in like a tsunami a month ago that had driven the S&P down to nearly 650, the reason that rhetoric has stopped is because the political class realized that they were going to put stocks down to zero if they said one more word. So they had to pull back from that brink of chaos. Now that things have started to get kind of okay again, they're going to start getting a little bit bold, and all of a sudden you're going to start hearing about more rather than less of these things, like mortgage cram down and cap and trade and all that stuff. I'm not looking for a specific number, Larry. I'm looking to see when the politicians start talking again, and when they do, we sell.